Hello and welcome to this UCL lunch hour lecture. I'm Vicky Spratt, housing correspondent at the iPaper and author of a book called Tenants, which is about the housing crisis. The theme of today's lecture is Rethinking the UK Housing Crisis, Options for Reducing Investment Demand and Overconsumption. And I am not exaggerating when I say that it is a complete pleasure to introduce today's speaker, Professor Josh Ryan Collins, somebody I have been lucky enough to interview multiple times, and he really is my go-to expert on the housing market, and there's nobody who has thought about it more than Josh. Josh is an economist with research expertise in money and banking, the economics of land and housing, and sustainable finance. And his main interest is the financial system and its role in housing markets. He's written some brilliant books, which, if you haven't read them, I would suggest picking up ASAP. One, Where Does Money Come From? A particular favorite of mine, Rethinking the Economics of Land and Housing, which really is brilliant and genuinely full of new ideas for how we get out of the mess we're in. And another, which I think should be reading for anybody who either can't buy a home and feels incredibly bad about it, or who thinks that young adults today can't buy a home because they're doing something wrong. It's called Why You Can't Afford a Home, and it's just a brilliant piece of work. I'm afraid that the list of Josh's achievements does not end there. He is also a senior policy fellow with the Ministry of Housing, Communities and Local Government, where he advises on housing affordability issues. He's also a council member of the Progressive Economy Forum, which is a think tank. And prior to joining UCL in 2017, he worked at the New Economics Foundation for over a decade. Josh's work has incredibly far-reaching policy implications, and I know it's read by everybody who needs to figure out where we're going and what to do about Britain's housing crisis. And perhaps some of them are even with us today. Let's hope so. They should definitely be listening to what he's about to tell us. But before we begin, I just wanted to let you know that there will be around 15 minutes at the end for questions, and you can submit them at any time during Josh's lecture via Slido, which you should have a link to. So I'll now hand over to Josh for the lecture.
Thanks, Vicky. Great to see everyone. Well, can't see you very well, but thank you all for joining today. I'm going to talk about my recent report, which was actually commissioned by the previous UK government, so the Conservative government, when the Housing Secretary was Michael Gove, was commissioned by the Department for Housing, now known as the Ministry for Housing and Local Government. And I will share some slides with you to get us going. That's my details there. UCL Institute for Innovation and Public Purpose is a part of UCL, an institute based in the Bartlett School of Built Environment. So today I'm going to focus on affordability and what I think is the true cause of unaffordability. So this chart here shows the decoupling of house prices since 1968 in the UK from rents and from incomes. So it shows the house price to rent ratio in the blue line and the house price to income ratio in the orange line. Hopefully everyone can see that. And the remarkable thing about this chart is that prior to the 1990s, there is some semblance of a equilibrium relationship perhaps between these variables. So the ratio of house prices to rents and the ratio of house prices to income seems to be stable. But then after that, from the early 90s, mid 90s onwards, we see house prices rising much faster than both rents and incomes. So that's a puzzle here. If we move on to today's situation, we can see that housing affordability is since the 2000s has worsened, and it worsened even after the global financial crisis. The global financial crisis did not result in a correction in affordability, but as you can see there, we see house prices, and this is the median house price to the median gross annual workplace earnings, increasing further. So you can see in London, things have got really bad in terms of affordability, but in England, things have also worsened, a bit better in Wales. Now, the usual standard of affordability at the moment is a 5-to-1 house price to income ratio, and you can see there for London, we're up at 12-to-1. For England, we're around 8-to-1. The other thing that's happened recently is rents have gone up a huge amount as well. Those of you who are students in the audience probably know all about this if you're living in London, and you can see rents massively increasing at record rates over the last years since the COVID crisis. And in particular here, this was driven by the rise in interest rates, the rise in interest rates to meet the inflation that we had. And this meant that a lot of potential first-time buyers could no longer afford to buy their homes. And so there was more competition in the rental market, which pushed up prices. That seems to be the main explanation. So we have a really huge affordability challenge. The solution to this, given by government after government, whether it's Conservatives or Labour, is the same. We need to increase the supply of new homes. That we're not building enough homes to meet the demand for homes from increasing population, from people earning more money, etc. And really my work over the last few years, but maybe the last 10 years, has been pushing back a bit on this narrative and arguing it's a bit more complicated than this, and that we need to think about the types of demand for housing and whether some of these types of demand should be considered for subjects of policy intervention. But before I get to that, I want to just look at the limitations of this supply side narrative, that we can solve the problem of increasing unaffordability by just building more homes. First thing to say is that most of the economic estimates of the impact of an increase in the housing stock from building more homes on affordability in the UK come out with a ratio of a 1% increase in the housing stock would lead to a fall in house prices of between 1.5 and 2%. So a number of studies, kind of some variation, but that's the sort of figure we're talking about. Now, if we think about the 1.5 million homes that Labour plans to build over the course of this Parliament, the next 5 years, basically a similar figure to the previous government, this comes out at a 5% increase, which implies a 10% house price fall, all else being equal. Now, when you compare this to the 306% increase in English average house prices since January 2000, from an average price of 75,000 to 300,000, we can see that just playing with supply, even if you do manage to build 1.5 million homes, which many people doubt, is not going to address the problem. And it's not going to address the huge disconnect between house prices and people's incomes, even if incomes grew much more than we're expecting them to grow, and that they have grown over the last 20 years when essentially they've stagnated. So even if you agree that we might build 1.5 million homes, this will not be enough on its own by any means, by an enormous margin. So we need to think about supply in a different way, actually. We need to think about the fact that actually only 1% of new supply that comes onto the market every year comes from new properties being built. The vast majority, around 99%, comes from existing properties being sold to homeowners or being let, new properties being let. And my argument today will be we need to think much more about this existing stock and who occupies it and how they occupy it. So the need is to focus not just on the aggregate supply, but the distribution of the existing stock. Now, another really important reason we need to do this is because there are hard environmental limits associated with just building more and more homes. Now, I was involved in a study that we did a couple of years ago with colleagues from other universities around the country, where we actually examined the carbon emissions associated with this 300,000 new homes a year target that the Labour Party also has, and the relatively limited and unambitious retrofit plans for the existing housing stock. And what we found very interestingly is that that target, if we ran that up to 2050, would absorb all 104% of the UK's carbon emissions, allowable carbon emissions, so the carbon emissions budget, leaving no emissions left to decarbonise any other sectors at all. So in effect, it would completely blow out of the water our carbon emissions targets that are compatible with keeping temperatures around 1.5 degrees global warming. So environmentally, this is simply not possible. And what that study showed is we need to focus much more on retrofitting the existing stock and ensuring any new stock is of the highest possible insulation quality. Anyway, the broader point for this conversation today is building lots of new homes is not going to work either in terms of affordability or in terms of environmental sustainability. So what are the structural drivers of the housing crisis? I have emphasized very much the role of investment demand, and the report that I'm going to talk about today, which I've got here in my hand, as I said, was commissioned by the previous government, where they specifically wanted me to look at investment demand or the financialization of the UK housing market, as it's sometimes described by academics. For me, these are the key structural drivers of excessive demand in the UK housing market, and the circle at the middle is the key thing. In the 1980s, the 1990s, we saw the liberalisation of mortgage markets. We saw increased flows of credit going into this relatively inelastic supply of new housing and pushing up house prices. These rising house prices relative to incomes and other forms of assets made housing much more attractive as a financial asset for everyone, as a store of wealth. And this meant there was even more demand for housing, and people borrowed even more. House prices, more credit flowed into housing. Banks had more expensive properties to collateralize their loans against, because when a bank makes a loan, it secures the loan against the home. And round we went with more and more credit flowing into homes. At the same time, we have a tax policy, fiscal policy, which favors home ownership above other sorts of tenures and favors home ownership above other forms of wealth holding, because you don't pay any capital gains on your primary residence. Council tax hasn't been revalued since 1991. So essentially, anyone holding a house as a form of wealth is paying much less tax than virtually any other sort of wealth. What have governments done to push back on this ever increasing demand for housing as a form of investment? Well, they've further subsidized that demand for housing. They've provided various home purchase subsidies, particularly for first-time buyers, and they've weakened the non-market, non-home ownership housing options for people. Deregulation of the private rental sector in the late 1980s in particular was very important here, enabling landlords to throw out tenants after just a very short notice and push up the rents, and the privatization of the social housing sector under the right to buy of Margaret Thatcher and various other policies continued by both Labour and Conservative governments. So there's no real alternatives now to just market-based home ownership, and this is the form of tenure that's been preferred through all forms of policy, through planning policy, through tax policy, and through financial policy in terms of mortgage market deregulation. So we have in effect ended up in a situation where the demand for housing and as an investment, as a financial asset, a store of value, has begun to dominate the demand and the fundamental utility function of housing as a consumption good, a place to live, a place to bring up children. And this is really problematic. It's also problematic from an economic perspective because housing has a high income elasticity of demand. That's a technical term, but essentially what it means is as you get richer, you're prepared to put more of every additional pound you receive in income into housing, increasing your housing space or moving to a nicer area vis-a-vis other goods. So when you've got 15 pairs of trainers, you're not very keen on buying one more pair of trainers. You're probably going to spend less money on trainers. Not so with housing, it's the opposite effect. So as people get richer, they consume more and more, all else being equal, unless there are policies that prevent them from this form of what I would call overconsumption. Housing has been historically a very good return on investment. The average return is around 7%, and it's been a more stable return. So historically, unless states do something to intervene in this process, people will put their money into housing. And this is a sort of big picture question we've got to grapple with. This chart shows you the two phases, really. My argument in the report is there are two phases of the financialization of housing, this investment demand phenomenon. The first phase is from the 1980s up to the global financial crisis. And what you saw here, as I was saying before, is this enormous expansion in mortgage credit. So that's the blue line in this graph, which shows you outstanding loans as a percentage of GDP on the left-hand axis. And I've plotted also real house prices on the right-hand axis, the dotted line there. And you can see that explosion in mortgage credit vis-a-vis non-mortgage credit, so loans to non-financial corporations, which is what the textbooks tell you banks are supposed to do. You can see that the latter variable goes from around 10% of GDP in the 80s up to 20%. But meanwhile, mortgage credit goes from around 18% of GDP in the early 80s up to 70% of GDP by the time of the global financial crisis. So this is an extraordinary explosion in mortgage credit, in new money, because when a bank makes a loan, it creates new money flowing into mainly existing housing, because most mortgage purchases are for existing homes. They're not to fund the building of new homes. The second phase of investment demand or financialization, I would call a wealth-driven phase, because banks did introduce, the central banks and supervisors introduced tougher mortgage regulation after the global financial crisis. Banks became more risk averse. We have various limits now on banks' ability to grant mortgages and stress tests, which we maybe can talk about. But the other thing central banks did is they pushed interest rates right down to zero to try and stimulate growth and stimulate inflation after the global financial crisis. Now, the effect of pushing down interest rates, particularly when you do quantitative easing, which pushes down the interest rates on the standard safe assets that investors will go for, particularly government bonds, is it suddenly makes other types of investment, in particular real estate investment, much more attractive, because the relative returns on housing or land or real estate go up vis-a-vis the returns on government bonds, where the interest rates have been pushed right down. What quantitative easing involves is the central bank buying those government bonds, pushing up the price of those bonds and pushing down the interest on them. So we can see this huge fall in interest rates, the base rate, but the rate on 10-year bonds there is shown in the orange, and then the bottom graph, the amazing fall in the cost of mortgages, which has been reversed since from 2021 in the last few years, but it's still relatively low actually from historical terms. And this led to a huge amount of investment going into the UK market. So we had a lot of investment into London, in particular from foreign purchases, many real estate funds starting up. Between 2014 and 2016, 13% of all homes in London were bought by overseas investors. So this kind of wealth-driven investment phenomenon. We did also have a big increase in buy-to-let purchases, so big increases in mortgage advances in the buy-to-let market, even though it was less so in the primary residency market. So you can see there, whilst the buy-to-let sector did actually collapse after the global financial crisis, it picked up very rapidly from 2010 onwards, with again stimulated by these low interest rates. And you can see that by 2016, the buy-to-let market is making up over 15% or around 15% of the entire mortgage market, which is actually a much higher level than it ever reached in the run up to the global financial crisis. So what you've got here really is existing homeowners buying second homes and outcompeting first time buyers, as the tougher restrictions on mortgage lending that are put in place post the global financial crisis make it much harder for first time buyers to get on the housing ladder. And you have an increasing concentration of property in the hands of existing owners. You also have cash buyers becoming increasingly important. So you can see here that cash buyers in the yellow line on the left-hand graph overtaking mortgaged movers and mortgage first-time buyers as the most important type of buyer. More transactions occurring that way than other ways, from sort of 2011 onwards. And then the right-hand graph from the Financial Times shows the share of first-time buyers who receive financial help from their parents by year of purchase. And you can see there that this has really exploded since 2005, 2010, and 2015. We see big increases in help with the deposit, the light blue there, and significant increases in parents just buying the entire property for their kids. So this is really a housing world where the rich dominate compared to how it was in the 70s and 1980s. All of this means that we've had really significant changes in tenure over time. Whilst all of these subsidies that the government was giving out were aimed at helping mortgaged homeowners, what we've actually seen is a major decline in that form of tenure, from around 43% in the late 1990s all the way down to less than 30% today. It's leveled out a bit in the last few years, and at the same time a big increase in outright owners, the baby boomer generation paying off their mortgages, and cash buyers coming in as well, and a big increase in the private rented sector as the social rented sector has declined. So more people owning their homes without a mortgage and also owning second homes, becoming landlords. And we're now in a situation where 1 in 5 homes are owned by landlords. So a huge concentration of wealth and a very unequal housing system. So those are the broad dynamics that we have. But one aspect that's talked about a bit less is how that existing stock is distributed. And my argument in the paper is that this is really important for governments to think about as they try and rectify the challenges I've demonstrated. So you can see here that this is research actually by my PhD student, Stefan Horn, along with some colleagues at the LSE. What they've done is they've mapped total households by the level of occupation in England. And by the level of occupation, the way which the UK Statistical Agency thinks about under or over occupation is they look at the number of spare bedrooms in a home, and you're under occupying your home if you have 2 or more spare bedrooms. So they give you a bit of slack. It's okay to have 1 spare bedroom, but if you've got 2 or more, you're defined as under occupying. And if you have less than no spare bedrooms, i.e. you're sharing when you don't want to, you're in overcrowded conditions. And what you can see there is that there is a lot of under occupation in the UK. Most people uh, in fact, there is more under occupation as a percentage of total households than there is people owning one spare bedroom. And if you look at that by tenure on the right hand side, you can see that the majority of this under occupation with 2 or more spare bedrooms is concentrated in those people who own their homes outright, who've paid off their mortgages, the baby boomers again. And it's actually a bit more balanced when it comes to mortgaged homeowners and private renters. There's very few, and social renters. There's very few people very few households that are under occupying relative to the total, which is shown on in the lighter orange in that chart. So this is not an efficient housing system. Hopefully that's clear. If we then look at the under occupation by age in England, you can see, unsurprisingly, the vast majority of under occupation is in households with older people over the age of 60, especially well, singles and couples, in fact. These are obviously, retired people who are not downsizing because they have no incentive to do so. They know they can pass on their wealth to their children. They're not paying any tax on their very large, disproportionately large properties relative to their needs. And again, younger people, there is much less under occupation. And then the final chart here just shows you housing wealth by age, and you can see there almost 50% of total housing equity, which is a lot in this country, is concentrated in those age 65 and over. So very unequal and a very inefficiently used housing stock is what we have. Now, what has the government done to try and address some of these problems? Because they haven't ignored them completely. Even the Conservative government over the last sort of 10 years has recognized that there is a bit of a demand side problem. And so one of the major interventions was made in 2016. There was a higher rate of stamp duty, which is one of the main taxes on property in the UK, imposed on additional dwellings, AD, higher rate on additional dwellings, HRAD. So this includes second homes and buy-to-let purchases. That was increased by 2% in 2016 vis-a-vis normal stamp duty. So that's one friction in these feedback loops that I've shown earlier in the presentation. And then, of course, more recently, we've had the much higher interest rates that followed the high inflation of the COVID crisis. And that's also put a bit of a friction in terms of mortgage credit flows. So the interesting thing is, has this had any impact? Now, this chart's a little bit complicated, but I'll talk you through it. What this chart shows is, in the blue line, show total transactions, total stamp duty transactions. So all purchases which are liable for stamp duty, nearly all of them are in the UK, is shown in the blue. And what the red or orange bars show is the number of higher rate stamp duty transactions. So people buying second homes or buy-to-let homes. And you can see there that this data only started being collected in 2016 when the new higher rate was introduced for obvious reasons. You can see there that actually this higher rate of stamp duty doesn't seem to have affected the number of transactions for additional dwellings, which stays pretty stable over that period. Of course, we don't know what it was before the tax was introduced, but you can see there very little change, and very little change in addition with the introduction of higher interest rates from 2022 onwards. Again, makes very little difference. In contrast, total transactions, and thus by inference first primary residency purchases, have declined quite significantly over this period, and as a result, additional dwellings have increased as a share of total home purchases. So the interventions in these feedback cycles that I mentioned, the higher rate of tax and the higher interest rates don't appear to have made much difference to the demand for housing as an investment, which continues to be maintained. And for me, this is really important in explaining why house prices didn't come down faster after the global financial crisis, but continued their upward trajectory, this wealth-driven investment demand. So that brings us to the policy options. What can we do to address this problem? And in the report, I lay out three main areas: planning, taxation, reforms to taxation, and mortgage market reform. Planning is a really powerful tool, and the main take home from the report was that we need to repress investment demand and support housing needs through the planning system. We really need to support first-time buyers who are really finding it impossible to buy homes, and we need to beef up the social rented sector and strengthen the rights of tenants as well. So my argument is, might be worth considering introducing new planning use classes that would enable local authorities to actually prevent people converting their primary residences or residences being used for long-term lets into residences such as short-term lets or holiday homes that are clearly subject to these clearly inefficient in terms of actually providing housing as a consumption good to people. This is a sort of obvious, easy win, I think. Many cities around the world are doing this. Barcelona's doing it. In Wales, they're doing it. Many cities, particularly popular with tourists, are introducing these types of rules or forcing people to have licenses to Airbnb their homes. So that's an easy one, I think. I think there's a strong case for restricting overseas purchases of homes. The Spanish government is talking about introducing 100% tax on overseas purchases from people outside the EU, for example, at the moment, particularly in areas like London. I think this could have quite a significant impact. In Switzerland and Australia, it's very difficult to buy a home unless you've been living in the country for five or more years. And then I think there's a strong case also for sort of going in the opposite direction and converting some of the existing stock, particularly in the private rented stock sector, or second homes or empty homes, into socially rented housing. It's much easier to bring new supply of affordable housing into being by converting existing housing than it is to build new housing, which takes much longer and has obviously more environmentally damaging impacts. And maybe you could give buy-to-let sellers incentives to sell their homes. Maybe you could give them tax incentives, for example. But I think this is the sort of policy that we need to be actively looking at. Again, cities like Barcelona are doing this at real scale. They've introduced a policy that gives local authorities the right of first refusal on any new property that is being sold on the market, and they are buying those properties at market rates and converting them to social housing. To do this, I think we need to raise the 10% acquisitions cap of the UK government on its affordable housing program. And the government is introducing more investment into social housing, but I think this maybe more of it's focused on building new social housing, but more needs to be gone into maybe converting other homes. One way of doing this might be introduce a housing corporation or a housing bank that could purchase land and property at scale. Mortgage market reform, I think, is also very important. We need steps to reverse the inherent bias towards the existing owners in the mortgage market system. I think one way of encouraging banks to make more long-term loans to first-time buyers and make them less expensive would be compulsory mortgage insurance, and thinking about how we could attract institutional investors who have longer term liabilities, so pension funds and insurance companies, to fund these types of long-term fixed rate mortgages that would reduce the risk for first-time buyers. The UK has a funny system where we have it's almost impossible to get long-term fixed rate products at a decent price. And of course, this creates risk for both the borrower and the bank. And that's part of the reason post the GFC that there hasn't been enough first-time buyer mortgages. There are ways of trying to do this. Again, you could use a housing corporation. But at the same time, I think it's very important that we push back on buy-to-let mortgages and other types of more speculative forms of investment. So higher loan-to-value rates or capital requirements for banks that are making buy-to-let mortgages. And I think the Bank of England should be supportive of this, because there's lots of evidence that show buy-to-let mortgages are very pro-cyclical. They generate financial instability. And then finally, property taxation is really key. Now, stamp duty, as I said, has been made a bit more progressive, and it's very good that we have this higher rate of stamp duty on second homes, which Rachel Reeves made even higher. That was increased by another 2% in the recent budget. But ultimately, stamp duty is a tax that discourages people to move. Now, if you've got an incredibly inefficiently occupied housing stock, the last thing you want is a tax system that discourages people to move, because what you want is a mass downsizing operation, basically, of those older people who are under occupying their homes into smaller homes, to free up those homes for families, and maybe divide up some of those bigger homes into flats. That's how you can really have an impact on the supply side of the system and really impact affordability. So I'm an advocate of completely scrapping stamp duty, and also scrapping council tax, and then just introducing a simple proportional property tax at an initial low rate. 0.5% has been discussed by one campaign that I've been supporting, Fairer Shares. This would lead to a sort of big one-off redistribution of wealth from richer areas of the country to poorer areas, and I think could potentially free up a huge amount of housing. But we can discuss the challenges of that going forward. At the moment, we just simply do not tax wealth gains, capital gains in property properly in this country. If that's not politically feasible, there are other shorter term interventions. Equivalised capital gains with incomes, I think, would be an obvious one. I'm not sure why that hasn't been done by Labour in the recent budgets. Restrictions on foreign purchases, as I've talked about, and more encouragement for rent-to-room schemes for people who are under occupying their homes. I'll finish there, because I've talked for quite a while, and we can take questions. Thank you.
Thanks so much, Josh. That was fascinating. And we've had lots and lots of questions come in, so let's try and get through as many of them as we can. I thought maybe we'd start with quite a fun one, because I'm just interested to know whether you know the answer. I've slightly cheated and Googled it while you were speaking. But somebody has asked how many houses there are in England.
I have to say, I don't know the answer to that question. Apologies.
Well, it's around 25 million, and I'll confess I didn't know, but I think it's interesting
Okay.
to think about how many we've got and how they're distributed, because as you highlighted, one of the main problems we've got, well, I think I agree on this, is actually distribution. So I think that brings us quite nicely into the first proper question, which is how many council homes would have to be built to fix the housing crisis and impact the price of housing? In terms of scale, what do you think needs to happen? How many social homes should we be building?
I mean, that's a sort of difficult question. What I've tried to emphasize with this presentation is that we don't need to build hundreds of thousands of new homes if we can make better use of the existing stock. So, the real challenge for me is how we do that. And my concern is that not enough government policy attention is going into that. As I sort of showed at the beginning of the presentation, if you built 300,000 homes per year, the estimates in terms of the impact on falling prices are, not great relative to the inflation in house prices we've had since 2000. So it's really not sensible to kind of put all our bets in this one pot of increasing housing supply. I would obviously argue that any new build should be affordable, and the more new build that is affordable, the better, because as I've shown, that will be much more efficiently occupied, and that's where the real need is. But there is also a need for doing much more with the existing stock.
Yeah, absolutely. And it doesn't seem like that's something that the government's currently talking about. Which brings me to another question, which is on a similar theme. This person says, brilliant analysis. Finally, thank you. We need redistribution of property use, but how do we convince society? And something you and I have talked about is that this is incredibly contentious. Oh, I think we might have actually lost Josh now. Sorry, everybody. 1 second. Hopefully he will rejoin shortly. Just bear with us. Sorry. Perhaps there's another question that I can answer while we wait for Josh. I think there was actually one directed at me. Oh yeah, this question piqued my interest because whenever I talk about some of the things that Josh's research focuses on, if I write about it in my column, newsletter, etc., I get trolled for days. I'm not exaggerating to say that, piled on by commentators, think tankers on the right, and pretty much anybody else who's on X. And most of them call themselves YIMBYs. And this question said, I'd be interested to know what you both think about the bearing of this research on the ascendant YIMBYism tendency in UK policy. I think it's a really, really good question because Josh's research shows us very clearly that building homes is not the only way out of the housing crisis. In fact, it may not be the most effective way. And some other work that he's touched on less today is that there is a huge environmental impact associated with building new housing. Now, the YIMBY movement that stands for Yes in My Backyard, just for anybody who's not familiar with the acronym, and I imagine lots of you are, that they really, really want to push house building as the main solution. And I'm just not convinced that they've looked at the data properly. Josh is back, so I'm going to throw that question to him as well. Josh, we lost you briefly, but I took a question that was aimed at both of us, which is what do we think about the impact of your research on the ascendant YIMBYism tendency in UK policy? And I was just saying, my reporting gets a lot of kickback from YIMBYs, from the YIMBY movement, people who identify as pro-building. But it strikes me that their push to build homes isn't actually always rooted in data.
As I was saying before, the problem is the evidence for lots of building new homes doesn't really add up. So yeah, I mean, I have some skepticism about the YIMBYs. There are, of course, places where building lots of new homes could make a difference, I think. And I'm not saying it's never a good thing to do. But overall, much more emphasis needs to be on the existing stock.
Yeah, absolutely. But that doesn't seem to be where the policy emphasis is. There's another interesting question, and this is quite hypothetical because I'm not sure that the scenario being described will happen, although never say never. Where does a significant drop in house prices leave those who have recently bought their first home? Will an entire generation have their investment wiped out?
Not in a good place, obviously. So I'm extremely sympathetic to that predicament. I think the solution really is to accept that we need to make private renting a more permanent offer for people and a more secure offer. And the rented reform bill that the government's pushing through is a good step in that direction. And I hope that makes progress through Parliament, but I think more could be done. And I certainly think exploring rent regulation could be a positive step forward, especially in cities, I think, like London, where clearly prices have risen to unsustainable levels. A number of cities around the world are either doing rent regulation already or looking into it, and I think we should do the same.
Yeah, good question. I picked that one because I've actually got skin in the game because I spent not this year, but the last couple of years actually in negative equity on the flat that I bought, which is my first home, and I used Help to Buy, the government equity loan to buy it. I imagine I'm not the only person in the country who's in a similar situation, having bought at the top of the market, in quite an overpriced area. So I'm really interested to see how that plans out. And I wouldn't wish negative equity on anyone because it made it very difficult for me to remortgage, but that's another story. But Josh, you've touched on something here, and I'm actually going to ask my own question because I'm quite surprised we haven't had one on rent control, because it seems to me that that is the missing piece of the puzzle in the presentation that you gave. And I'm increasingly convinced that rent regulation is one of the most pro-growth policies a government could enact, because you would be limiting how much rents can be charged and protecting renters' incomes. Because right now we've got people spending huge amounts of their income after tax on rent, which means they don't have money to do other things. And as you point out, the Renters' Rights Bill will do something to regulate rent increases. They'll be limited to once a year. There'll be a tribunal for people to dispute them. They'll have to be in line with local markets. But do you think that goes far enough? And do you, how, if you were in charge of policy, how quickly would you bring in some kind of rent regulation?
Well, this is not my area of expertise, but the evidence that I've looked at suggests that rent controls can be effective in bringing down rents in cities, and the pushback is often that it leads to a reduction in the supply of rental accommodation. But again, there's very mixed evidence on that. And I think if it did lead to more landlords selling up their homes, that wouldn't necessarily be a bad thing. If those homes were purchased by first-time buyers, that would take out people who are competing in the rental market, and that could free up the supply, or at least counterbalance the reduction. And so I think, yeah, I agree with you. I think it is a pro-growth policy. It's also a progressive policy that supports lower income, middle income households, and in places like London, virtually anyone who isn't working in the city or gets a big lump of money from their parents really is forced to rent. So it's not just a sort of welfare state type policy. It's a structural intervention in a housing market that is clearly not working for the wider economy.
Yeah, absolutely. We've got time for a few more questions. This one's interesting. Is house price inflation a bubble dependent on expectations of future rises and the reinvestment of previous generations' gains? And if so, what could burst it?
Well, I hopefully showed you in the sort of feedback charts that a lot of this is about expectations. It's about expectations, as you say, of future house price increases. And certainly my argument would be that over the since the GFC, we've seen this sort of wealth-driven investment whereby people who've built up equity, paid off their mortgage, are using that cash to invest in second homes or bigger homes, and you see this big increase in cash purchases. So this sort of wealth-driven investment demand. And I think the best way of dealing with that is through reforms to the taxation system. So if you start taxing property as if it was a financial asset, you will discourage demand for housing from these types of purchasers who, are really not that sensitive to increases in interest rates, for example, which one might have expected would have led to a bigger fall in house prices post 2021, given how important mortgage credit was in the big increase that I showed in the 90s and the 2000s. So that's why I think we need to move towards a better tax system, as well as using the planning system to protect protect housing needs vis-a-vis housing wants, really, and this excessive demand for housing as an investment.
Yeah, that's really interesting. Something tells me that it won't catch on quickly though, because even stamp duty reforms has been contentious. But this is a kind of a follow-on question, which is wouldn't a wealth tax hit the asset rich but income poor?
It could hit people. Classic example is the old lady living on her own in a big house, but she doesn't want to leave because her friends are nearby. She's settled in the neighborhood. But there are ways around that. You could make the tax liable only after she's passed away. You could enable her to extract equity against the home to pay the tax over time, so she wouldn't need cash to do that. There are various mechanisms that could be used. I mean, let's just be clear. The government is constantly subsidizing different types of people to different extents in the housing market. It's subsidized first-time buyers to a massive extent. Over the last 25 years, it can subsidize asset-rich, cash-poor people. Politically, it's not that difficult. So I think that you've got to sort of assess the pros and cons of these types of policies, but on balance, I think a better tax system is going to have a net positive effect.
And I think just, I suppose, my perspective from reporting recently, particularly on the winter fuel allowance, that sticks in my mind, is whenever you make any change, any policy change, there are inevitably some people who get caught in the crosshairs or who are at the margins of it. I'm not sure that's a reason not to do it, but I think, as Josh says, it's about mitigating the pain that you cause people who are maybe just outside of the cutoff of the threshold. And that doesn't mean that reforms shouldn't happen. And I found it really interesting with the winter fuel allowance, just seeing how that played out, and people who were sort of just on the line of needing it, but technically probably wealthy enough to go without it, were the ones that generated the headlines. And so much of this, it's always very interesting reading Josh's work and suggestions from brilliant academics, because things that appear as common sense are workshopped in Westminster about how they'd play out with my colleagues. And actually, I think that's often one of the biggest barriers to getting anything done. We've probably got time for two more questions. I think this is an interesting one. Aside from waiting for central government action, what could local authorities be doing that they are currently not doing to tackle housing supply and affordability?
I think this is where the planning suggestions I made could come in, because that's the one area where local authorities have some power that perhaps they're not using. So I would recommend looking into adjustments to council tax or restrictions on planning use where it's possible to support housing need over and above housing investment demand. And I've given some examples from Barcelona in particular is a good place to look. I'm aware that local authorities are under a huge amount of pressure at the moment, and a lot of them are putting up council tax just in order to bring in more money. But I do think steps could be taken to make better use of the existing stock in particular areas, to try and deal with some of these under occupation dynamics.
Really interesting point. And actually, Wandsworth have just announced that they're going to increase council tax for owners of empty properties. And that's being reported as them increasing council tax for thousands of homeowners, which is technically true, but not the point, which sort of comes back to what I was saying before. It's about how it will be, how it will land. But I think they're doing something that, councils across the country, particularly Wales, have been looking at increasing council tax for second homeowners. And there are ways to sort of pull levers to fix the distribution of housing in any given area or disincentivize investment in homes as opposed to owner-occupier purchases. So we might be seeing more of that. I think Wandsworth have been very brave to
Hmm.
go first in London.
Yeah, taxing empty homes is a sort of very obvious step, I think. Yeah.
Mm. Yeah. And potentially our last question, but this is quite an interesting one. Can you compare Britain's housing market with the German market, where prices are relatively stable and there is a large private rented sector with some security of tenure?
Well, you can compare them. They come from very different institutional, political, and economic histories. But I think, on balance, Germany has a much better, sensible housing market and housing institutions. As you said, eh, there is a much better, stronger regulated private rental sector. In Germany, it's quite normal for families to rent for their whole lives and bring up families in rental accommodation. There are rent regulations, so you can't have your rent just pushed up. You can't be thrown out of your home unless you stop paying the rent, essentially. And there has been, house prices, there has been a bit of a bubble in the housing market over the last sort of 15 years, but overall, house prices have not appreciated relative to incomes by anywhere near what we've seen in the UK. So I think they have a better housing market ecosystem, and they're much less dependent on rising house prices economically than we are. So our housing system is dependent on rising house prices, people withdrawing equity to fund consumption. And it's a debt-driven model that's really not very sustainable.
Yeah, and I think we're going to be finding out just how unsustainable it is in years to come. But I scare everybody when I say things like that. And we are coming to the end. So thank you for all of your questions. I'm sorry we couldn't get to every single one. And thank you so much to Josh for this really thoughtful piece of research.
Thanks, Vicky. Thanks for sharing.